Good morning, everybody. It's the 17th of May. We're Signal Centre Talking Ball. I'm Joe, joined by Steve. Good morning, Steve.
Joined by Steve eventually.
Eventually, yeah.
Sorry about
Everything all right,
that.
Steve?
Yeah. Just I was sitting here doing some work and missed the notifications. So,
Now I know you were
um,
lying.
oh, is this live? It's not going out live, is
Yeah, sorry.
it?
Okay, let's get into it then. Let's move on to the headlines first up. So yesterday we had the German ZEW index, and that dipped throughout the month. It dipped to minus 10.7 for May from 4.1 previously, below the expectations of minus 5.3. Also a small decline in the current conditions component to minus 34.8 from minus 32.5. This is also slightly stronger than forecasts. Overall confidence in the Eurozone remained weaker. We also had US retail sales yesterday. That increased 0.4% for April from a revised 0.7% decline in the previous month and below expectations of 0.8%. We had some hawkish Fed rhetoric yesterday. The Cleveland Fed President Mester stated that she doesn't think the central bank is in a spot to hold rates yet. She added that rates are not restrictive enough and that she is not at the point where it is equally probable that the next move in rates will be for an increase or a decrease. We saw Canadian inflation edge higher yesterday. The headline number increased to 4.4% from 4.3%, above consensus forecast of 4.1%. We saw a GDP boost to Japan. There was stronger than expected number overnight, with 0.4% being the print for the first quarter. And there's also some speculation that the Bank of Japan would adjust policy at the June meeting. Stronger than expected data failed, however, to underpin the yen. The Bank of England today, we've got some comments coming out later on from the Governor, Andrew Bailey. He's due to make comments on Wednesday, with markets watching for any hints of policy or on policy very closely. So that's it for the headlines. Let's get into having a look at the charts. There's a few requests coming in already, which is great to see. If there are any more, please feel free to post them up. In the meantime, Steve's going to kick us off with a look at cryptocurrencies.
Excellent, thanks, Joe. Going to dive into Bitcoin, which is under pressure this week, and we've, as I said yesterday, the two real levels to watch is this on the support side. We have it at the neckline of this inverse head and shoulders formation, which tried desperately to hit its measured move target. The measured move target was 35,000, but it stalled at 31,000. Couldn't overcome the resistance area, which was formed by the previous support area over a period of a couple of years, and has moved lower from here. We saw an aggressive move lower. We broke support last week around about the 27,000 level and moved very close to this support. But at the moment, we still haven't tested it this week. So we're unchanged on the week so far, and there is potential, I think, for further downside. At the same time, on the shorter term time frame, we are seeing a topping formation. Now, the topping formation for this is 22,600, and we can see that we've broken down through the neckline. We've looks like we've retested that neckline as well, and over the last 24 hours, 36 hours, we have drifted a little bit lower from the high of this week, which was at 27,666. Sign of the devil. As you know, my overall view on Bitcoin is we should see weaker prices over the medium to long term. A bit of a cleaner head and shoulders formation in Ethereum, but it's still holding up nicely, really trading around the neckline or just above at the moment. The main level in Ethereum is around about the 1730 mark. I don't know why it's not on this chart. Maybe it's on the it's on the weekly chart. As you can see, it's provided multiple touch points in the past. So from a horizontal perspective, this is quite a very strong pivotal level. We'll say it acts as good support and good resistance when price is above and below. So at the moment, the 4-hour chart is in we're trading below or in the Ichimoku cloud, so expect a little bit of volatility here, but it looks like we're just having a little bit of a consolidation rally before we get the next real move. The hourly chart is trying to break through to the downside, so at the moment slightly more positive on the hourly chart than it is on the 4-hour chart. Remember, the longer term time frames are the ones to watch a little bit more closely. XRP looks to have had a really nice spike yesterday, but it didn't get up to, or did it, 47 cents? No, it stalled in front of 47 cents, which is has been quite a key level. And again, we've got this head and shoulders formation on this chart also, and that spike higher today has actually retested that neckline that we're seeing here. You can see here, if we drag it out, that's quite a nice retest. Currently, the daily chart though is failing from that spike higher, so that could end up being something like a shooting star candle, which will be a bit nervy for the longs in the market. On the shorter term time frames, we're nicely above the 4-hour cloud. We do have a downward trending resistance, which we drew in last week, and that comes in at 47.20. That really is the level that the bulls have to get above and hold above for things to hot up a little bit to the upside. So at the moment, little nice spike higher, a little bit unusual. None of the other markets have really sort of like picked up on this, so it is a bit of a law unto itself, XRP, but is dominated as well by Bitcoin. So yeah, watch that one. That seems to be a bit of interest going on in that one. Let's take a look at commodities now. I think you remember at the start of the week I was looking to, there it is there. This is the annoying thing, isn't it? I've eventually hit my stop, so our little intraday gun to head trade idea didn't play out. I did make a little bit of a profit on it earlier in the week, but it's taken a little bit longer. Or sorry, that was yeah, that was Monday. No, it wasn't. I think that was last week I did that. Monday, Tuesday. Oh no, we're Wednesday now, aren't we? Yeah, that was Monday. So yeah, looking at this gold again, we've just to remind you, weekly chart, we failed to create a new high, so we posted a lower high on the weekly chart, 2067. The daily chart, we've got a bit of a intra-move uptrend going on. We're just below it at the moment. This was my target level for that Monday trade idea, and you can see this like price action on the daily chart being dominated by this bearish engulfing candle after we posted that high last Tuesday, in fact, at Thursday the 4th of May at 2067. And price action has been a little bit under pressure. Obviously, we've got the dollar index looking quite nice and spicy and strong, and this is obviously going to impact on gold against dollar. Dollar goes higher, gold price will go weaker because it's based in dollars. Short term, this is a little bit messy, isn't it? Let's take a little bit, get rid of this one here. But I suppose we can really redraw this line, and price action still remains above it. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, multiple touch points. We did spike below this upward trending support line here, trading around 1990. The next real level of support really down at 1970, so $20 to the downside there. And this is the downward trending resistance line, which today comes in all the way up at 2023. Don't expect to see that today, but if we do get some sort of rally, 2000 has been quite a pivotal point and would provide a good psychological resistance level. Let's look at crude oil. Crude oil on the 4-hour chart, straight into that, lovely. Had a little bit of a retest of that downward trending resistance and the cloud, and has stayed below it. So let's take a look at the daily chart. We seem to be still under pressure. We had a rally higher on Monday, but since then we failed to get above that resistance level. Short-term resistance coming in at around about the 71.75 level and projected lower from there. Now support very clearly around about the 69.40 level. So let's watch out for that. 69.34 in fact was Monday's low. So all eyes on that today. Quite a nice tight range, looking for a breakout. We've got oil inventories out later as well, so that will be one to watch. Brent crude oil, the similar sort of price action. Obviously, it's trading at a $4 premium to WTI crude oil. 73.32 is the support there, and resistance, expect initial resistance around about the 75.78 level. Above that, further resistance coming in at 77.53. But again, under pressure, although the momentum is stalling slightly to the downside, it looks like we have posted a higher low, but really all eyes on that, see if that can get taken out today. The main support below, all the way down at 71.44, where we posted that inverted hammer. That's about it, Joe. Let's take a look at dollar, unless there's been any other requests for commodities.
No, doesn't look like it today. There's a few for some yen currencies, so we'll get onto those momentarily. First of all, I will kick off with the dollar index. As you mentioned, it was looking pretty tasty, and it certainly does at the minute on the daily chart. So we can see here there is major support at 100.82 that's been found on a number of occasions. We've now broken through resistance at 102.23. There was a very short term and narrow range that was forming in here within the dollar index, but we've broken through that. Price is now finding that area as support, and we're seeing prices continue to push to the upside. So we do have some resistance here. The reason this is here is because here on the 27th to the 28th of March, we had a gap create on the charts, which then acted as resistance and has done so on a couple of occasions. So will it do so again? We need to keep an eye on that. But all in all, it does look as though maybe the dollar is forming some sort of rounded bottom formation, which is quite encouraging for the bulls. And if we can break above this 102.83 level, then we may trigger further gains in the very short term. Now, obviously, that's going to have an impact on euro US dollar, pretty much the inverse of what we've just looked at in the dollar index. We can see here that the price has been trading within a nice bullish channel for a significant period of time, going back to these lows that we saw in September 2022. But in recent days, we've seen a breakdown of this channel, most notably this candle here from last Friday. Big bearish candle, break through the channel, and now we are seeing attempts at recovering the channel, failing and acting as resistance. Yesterday, we can see there was an attempt to move back into the channel, but we failed, posting a bit of a reversal candle there, and we're slightly on the back foot today. So this could trigger a bit of a correction here in euro US dollar. I've highlighted this area down here because that's where there is certainly a big area of support. That's down all the way at 105.31. So it might not happen in a straight line, but let's also see if there's any fib levels we can reference as well. Going from these lows in September to these highs that we posted in April, this pretty much lines up with the 38.2% fib area as well, which would be a kind of natural retracement for this to undergo, given the uptrend that we've got in place here. So looks as though euro US dollar is potentially looking a bit fragile. So keep an eye on that. Okay, let's look at cable. That's on the back foot today. Again, threatening maybe this uptrend line that we've got in place from these lows that we posted in September. We can see that prices have been on a steady trajectory, but have failed at resistance here, which goes all the way back to May last year. And that's at 126.66. We can see there was a rejection at that level, and also now threatening this uptrend line as well. So we did actually see officially a close below that last Friday, but then we recovered pretty strongly on the Monday session, but we seem to be rolling over yet again. So I think if we take out those lows that we saw on Friday, which today comes in at 124.44, then that may trigger a deeper corrective move. And again, if we're looking at these 38.2% fib levels to give us a bit of a clue about where any correction could unravel to, we are talking about a pullback into this kind of region here, which is down between 118.27 to 118.58. And of course, in order to trigger that, we're going to need to see pretty much some dollar strength, and that needs to break through some key resistance levels. Okay, so let's move on to some of the requests that are coming through. So we've had sterling yen, Aussie yen, CAD yen, and euro yen. So a few yen currencies to look through. We've obviously had overnight some potential movement from the GDP in Japan. Let's see how that's impacted these markets. Let's take a look at sterling yen first of all. It's on the front foot today. So we can see here that prices have been moving higher in the short term, following the break of this short-term downtrend back here in March, and prices have continued to accelerate to the upside. So Following the break through these resistance levels, we expected prices to find support around 167.97, which they did, and we've continued to see prices move higher. Now, potentially what we're doing here is forming some sort of flag or continuation pattern. We can see here that prices have been consolidating in the short term. So ideally, if we can get a break through this, that would indicate that we are going to see a continuation higher. Obviously, we have to be mindful of these previous swing highs back from October last year, and we can see that on the first attempt to try and break through, that actually failed and found resistance. So now we're consolidating, potentially ready for a continuation to the upside. So if we can break through this 172.13 level, then we're targeting a move to 174.88, which we have to go back a long way on the charts. We're talking back in this region here, which is 2016, 2015, 2016. So will be the highest levels that we've seen in 8 or 9 years. So pretty significant stuff there on sterling yen. Let's take a look at Aussie yen. In fact, sorry, there was a request to look at the hourly chart on sterling yen. So let's do that. Mark suggested maybe there's a head and shoulders forming here. So I took a brief look at this on the hourly. I can't quite see a head and shoulders yet. Maybe it is in the process of forming some sort of top, but for now, I can't really see it at the moment. So for me, it looks like maybe we are trying to break out through some sort of triangle formation here, this being the lower end. Let's draw that from the low. So my preference here would be for a breakout of this triangle, which is the continuation pattern I spoke about on the daily chart, looking for higher prices here. So no top formations just yet, I don't think, on sterling yen. Still looking pretty strong overall. Let's take a look at Aussie versus yen. So overall, this is trading in a downtrend. We can see here a succession of lower highs and lower lows. In the shortish term, it's been trading in a bit of a bullish channel here from these lows that we posted in March. Bit of a corrective channel. Now coming up close to resistance of the downtrend, but also some horizontal resistance at 91.29. So prices pretty choppy and sideways here at the moment. And I think in order to invalidate this kind of bearish threat, we probably need to see a takeout of these highs up here at 93.03. So plenty of work to be done before we can get a bit more bullish about the prospects of Aussie yen. Obviously, if we continue to trade within this channel and then eventually break down, then that would suggest we're going to see a continuation lower in line with the dominant trend. Let's take a look at CAD yen. So this is an interesting one. I spoke about this earlier in the week and last week actually. So we've got a big area of resistance here. So it looks as though we formed a top here on CAD yen, completed that back in December, and now since then this area has acted as a pretty significant resistance area on the charts. In the short term, we can see prices have been trending higher, but on a number of occasions now we've rallied into this area here and failed to overcome it. If we look at yesterday's price action, we can see there's a fairly long-legged doji that was posted there. So we attempted to break through these levels but failed, posting a doji on the day. We are on the front foot today, but still plenty to be done in order to overcome this level. So do be a bit careful there. It's into a major area of resistance. We need to probably see a breakout here, or if you're looking to fade this, then look for these kind of dojis or reversal candles to form. Obviously, we can look at intraday charts as well. Failures to overcome these kind of previous highs that we posted yesterday around 101.80 would be maybe a sign that you could think about some short trades there on CAD yen in the short term. Euro yen. So we looked at this earlier in the week. I again suggested that maybe there was a continuation pattern forming here, a bit of a wedge formation, and a break to the upside would have triggered further gains. So we got this close on Monday outside of the wedge, and we've seen 2 consecutive days of positive price action since, although not really bursting to the upside as we'd have hoped. The previous highs is what we need to focus on in the short term. That's at 151.63. That would be the next area to target on the upside. But all in all, following the break of this range and the completion of this small pattern, we could see higher prices. Let's take a look at the intradays, because we also highlighted that there was a potential head and shoulders forming here on the 4-hour chart. And maybe there is, maybe it's still on the cards here. We can see if we extend the neckline, we broke down through these levels here on Wednesday, yesterday at 2 o'clock, and the retracement is kind of into the neckline of that potential top pattern. So maybe some interest there in the short term on euro yen, but do take into account the daily chart. Was I looking at the wrong chart there, Mark? Was I looking at the 4 hour? Was I? Let's see if we can look at the hourly.
Yeah, I think he's looking at the hourly chart. I mean,
Yeah.
on the weekly chart as well, Joe. I sort of like there's been a couple of sort of bearish looking candles on the weekly chart, looking a little bit toppy.
On euro yen.
Yeah.
Yes.
Sorry, sterling yen, wasn't it? Was it sterling yen?
Sorry, sterling yen. Yes. Yeah. So we go back to these highs in October 2022. We can see that that is a very significant area there.
We've still a long way to go to sort of put in a double top, but
yeah,
it gives an indication we're getting that little topping type of formation potentially. Although this week's price action has been a little bit more positive.
Yeah, so even looking at the hourly chart, still can't quite make out head and shoulders on there unless you're talking about this tiny little thing here, which is a bit all over the place.
Yeah,
a
I
bit
was
of a
going
deformed
to look
head
at
and
this,
shoulders.
Joe. This is this.
Wow, what is that?
That's like a sort of like a head and shoulders formation that me and Mark can see.
Okay, bit freaky.
Yeah, it is a bit freaky because ideally you'd want the basically the neckline between the head and the right shoulder to be somewhere. It's quite acute, isn't it? It's quite acute up there. So, but overall, if you sort of see the left shoulder, right shoulder look to be the same, but we just haven't had that deeper correction with the neckline to between the head and the right shoulder. So that's why it's not blatantly obvious, but it's still got that. It's still having that sort of type of price action. For me, you have the rally up here, the stall, the reversal high, which was pretty sharp, back to the head, and now we've posted a bit of a lower high, and then we've got a couple of decent bearish engulfing, looks almost as well like a hanging man candle, and also this shooting star type looking candle. So, but I think we've got a lot of work to do just to get through this support area here before we can get excited about this being a bit of a top in my eyes. But
cool. Thanks
yeah, was there other stuff, Joe, that you
no,
had
we're going to move on now. Let's move on to some indices.
Okay, we had a bit of interest yesterday in the DAX. Let's take a look at this. As I say, weekly chart reminder, hanging man candles really looks like it's forming some sort of diamond top or something. But yeah, it doesn't look great. If we manage to sort of break above 16,000, then this type of formation is out the window. But until then, looks a little bit toppy to me, although the prices are remaining elevated. So it's very, very difficult to trade this. Potentially we'll have a double top formation if we do break down. The levels to watch all the way down to 15,650 and just above there as well at 15,700. So they're the real levels to watch. On the 4-hour chart, we've got upward trending support line, but it goes all the way back to March 20th. So not a great trend line to sort of like pick on. There's not, if there was multiple touch points in between, I'd be happier. But at the moment, there's I suppose we could just pick out something like this. Look at the shorter term picture rather than here's a potential upward trending support line. We've only got 2 touch points. We need a third. That third would need a move to 15,830. But above we have got a nice little downward trending resistance line from there with, as you can see, 5 touch points there. So resistance for me coming in today, 15,970. As I say, if we do get above that 16,000 level and close above there on one of the bigger time frames, then we've got more upside. The hourly chart though, giving up a little bit to the downside. EU50, I was looking at this for a bit of a gun to head potentially today. We've seen price action breaking lower and just adjust that downward trending resistance line. Resistance coming in around about the 4,320 up to 4,330, but we're breaking down. I might have missed that boat, but we'll see. On the Dow, negative price action yesterday, nice bearish engulfing candle that's like continued this downward move. So really Monday's move bucked to the trend If we take that out of the equation, we've got like 6-7 days of negative price action. Nasdaq is holding up. That's the only one bright spot in the indices at the moment. Tech sector performing okay. And the S&P is also under a bit of pressure, although it's a little bit more sideways. Again, support coming in at 4,100, resistance probably around about the 4,160. We're trading quite close to that support level, so maybe a little bit of potential for the downside. Overall, more recently, we have posted another serious high, but we've had that evening star formation, which has added a little bit of negativity to it. And we also looked at Aussie 200. That's had a big reversal today. We've taken out the previous Friday's and Monday's price action, trading to the downside, and we've taken out support also, which was in at 7,192. Next support, more important one, 7,122. And at the moment, yeah, we're heading a little bit lower by the looks of things on the indices, apart from Nasdaq.
Okay, thank you, Steve. Right, let's move on to the gun to the head challenge. So Steve and I are going to pick trade ideas live on the stream. We've got a live account that we're running these ideas on. We put £2,000 into that at the start of the year. A couple of basic rules to follow. Both have stops and targets, pretty obvious when it comes to trading, but something that some people still don't necessarily follow. That is one of our non-negotiables. We must have stops and targets on everything. We also must have risk reward ratios of 2 to 1 or better. As I explained last week, we've got a win rate of around about 40% of these trade ideas, and that's going back over nearly 800 trades each. So it's a pretty significant track record that we've built up in that time period, and having a risk reward ratio of 2 to 1 or better has been, again, another one of those non-negotiables. We trade these ideas throughout the session, but we close them at 9 p.m. UK time unless the stops or the targets are reached within that time frame, just so we can clear the decks and have another look at the next trading session. And also means that we don't have to take any additional fees or charges from holding positions overnight. And from a money management perspective, we both risk 1% of our trading capital on these trade ideas, or less if we can't get the exact number on. And yesterday, Steve, you traded Euro Oz, did you?
Yeah, someone. It was a weird one I traded. Let me. Can you find it, Joe? I did post it up.
You did post it up. Let me see. Hang on. So we post all these ideas to our profile, signal_center, as well as trading in the live. Steve is looking for Euro Oz. If we click on that, we can see the multi-time frame charts that Steve was looking at. The idea is up here on the top left. We can click the play button. We can see that it sadly was stopped out. But that's the way the game goes, unfortunately, sometimes. Overall, our account balance, I don't know if you can show that, Steve, is still on side. I think we're about 1 hour on side, just over maybe.
Yeah, where is it? There we go. Just over 1 hour on side. Can't seem to break above that 3.5 hour, Joe. We got up to that a few times now and keep getting knocked back down again.
Right, well, let's sort that out today then, shall we? I've got an idea ready, if you want me to go.
Go ahead.
I'm going to back Mark today with his head and shoulders that I couldn't see on the chart, the acute looking head and shoulders on the sterling yen setup. So maybe trading acute head and shoulders is where I need to go for future strategies. But yeah, looking pretty negative over the last hour. So I'd like to get on short with that, Steve. 170.22 I've got as a current price. It's going to go pretty tight with the stop at 170.74, and I'm going to target a move down to these lows at 167.97. In fact, let's go 168.02 just to be in front of a big round number. 168.02, Steve.
Is that 4 to 1 risk reward? Is it?
It is, yeah.
Oh, nice. Yeah, 170.74, 168.02. So you're on, mate. You're off and running.
Cool. Let's see how it goes. Have you got one ready?
Going for a humdinger. Let me have a quick look. I was going really EU 50 played out well last time, so I was thinking about doing something like this again. But I really need an aggressive break to the downside to make this work. Why not? Yeah, let's do that. I'm going to go for this one, Joe. EU50, broken down below the hourly cloud, give it a little bit of room on the upside, and looking at getting back down to where the next level of support is after we break through 4,267. That's what I'm thinking of. Let me see if I can get it on the sell market. See if I can get it 1%, 43.25. Remember 1%, that's close to it, 18, and 4 to 18. Yeah, that looks good to me. Short of EUR 50, that's the one we can get on in a little bit of size and give us a little bit of room. Trade at a 1%, close to 1% of our account. So yeah, reasons for that are weekly chart looking pretty poor. Yesterday's a bearish engulfing candle and the 4-hour candle also running into resistance and that downward trending resistance line. So yeah, plenty of reasons for me to get short of that.
Nice. Okay, let's take a look at the day ahead then before we wrap up for today. So Bank of England Governor Andrew Bailey is making a speech today at 10 to 11 UK time. So that may impact anything linked to sterling. Obviously, we've just posted a sterling yen idea. So maybe that will be impacted then. At 3:30 UK time, we've got the US EIA crude oil inventory. So if obviously you've got exposure to oil, do be aware of that. Overnight, we've got Australian employment report at 2:30 a.m. UK time. So that may impact anything linked to the Aussie dollar and also the Aussie indices. And then on Friday, we've got Fed Chair Powell making a speech. And obviously, all eyes will be on that for updates on policy. So let's leave it there, Steve. I hope everybody enjoyed the show today. We'll be back tomorrow. And until then, trade safe.
Cheers, mate. Bye.
Bye-bye.